Okay, I'm coming out with another variable rate update as per every week. So look, here's a few things to know. First of all, rates have not gone up. I hear this every single day. Hey, rates have gone up. I hear rates have gone up. They haven't. Rates have not gone up. This is the week that they're going to be meeting again for the Bank of Canada to set the overnight rate, which influences the prime rate. Do I think rates are going to go up? Yes, I think rates will probably go up, like 0.25% or something like that. And I think that is, important to know that I do think rates are going to go up. I think that right now the Bank of Canada is saying that we should expect for rates to go up. Economists are saying the rates are going to go up. Now, this was very similar to January, but I think that definitely rates should go up this time by 0.25%. I think that should be expected. And if they don't, I think, first of all, you're going to hear me say that I don't believe they'll go up the rest of the year. Now, do I think rates going up is a problem? Not at all. I think that rates are going to go up once or twice, maybe 3 times this year. And I think that if you have a variable rate at 1.45 and you get to 1.7 and even to 1.95, I think that's still, I know that's still cheaper than a fixed rate out there. But, let's talk briefly about a couple things that are really important with this. First of all, I hear a lot of stuff around, hey, I want to lock in a rate because I don't know what's happening. I don't know if what happened in the 80s is going to happen right now. I should do a whole video on this one time. But hey, look, there is I really hesitate to use the word no chance of anything ever happening, but virtually no chance of the 80s happening. I'll give you a few reasons on this. First of all, in the 80s, when interest rates moved up, people continued to consume. So that means as rates were escalating up, people bought houses more fervently and more aggressively. And do I think that if we moved rates up to even 4 or 5%, people would still buy homes at an aggressive pace? No, I do not. And I definitely think that, we have to keep in mind that 42% of homes here in British Columbia, at least, and even that statistic is very similar across Canada, is that they are free and clear homes. And so that means that the people that are buying homes, they have a mortgage on them. And so, if they, that means that no matter what happens, they're not influenced by interest rates. But I don't think that you're going to still see people taking on higher interest rates just to get in the market if that happens. So remember, in the 80s, people continue to consume. So that's a big thing. Second thing, in the 80s, the prime rate overnight rate was not calculating the same rate. What happened was that, without getting too technical, the overnight rate was actually based on a variable rate on the bond market. And so what happened with that is that as that rate moved up, that continued to move rates up. In 1996, they changed rates, the overnight rate around the Bank of Canada, and set it to a policy meeting that happened during the year, and so intentionally setting it up. So it's not just when I say, hey, rates won't go up like how they did in the 80s. It's not just that I'm saying that, hey, I don't think rates go up in the 80s, or I don't think that it's possible. It really is impossible because they don't even do the rate in the same way. So if you're hearing that, and from really well-intentioned people, to be quite frank, just know that rates can't go up like they did in the 80s because the interest rate doesn't even move the same way. Back then, it automatically moved by a floating rate. Now it moves by a set policy rate, not the same anymore. And then I want to touch on the fact, too, that, what is going to move interest rates up? The truth is, interest rates are going to move up, and we talk about this all the time, is interest rates move up to curb inflation. Now, I'm saying this to everybody about 10 times a day. So people go, well, easy call then. Inflation is out of control, and so interest rates should move up. The problem these days is the cost of goods is not moving up because of too much monetary supply. That's part of the problem. So that means they're printing too much money, and that means if they increase interest rates, that will slow that down. Now, that has definitely happened. When people hear that, they go, well, of course that's happened. They're printing money like crazy. That's a true fact, and that's a problem in some sense for sure. However, the problem right now is that the cost of goods is not necessarily going up because of too much money supply. The cost of goods is going up because there is legitimate reasons why some manufacturing goods are going up. You're looking at some businesses, parts and different supplies. Think about if you have an issue with a mobile home company recently where they couldn't get the parts. So that means that their stuff is sitting in storage longer. They're paying storage costs longer. The shipping costs are increasing. All those types of things. When we look to what's going on in Russia and the Ukraine. This means that there puts more pressure on the supply chains, less and it's more costly to get goods. All those types of things increase prices, and moving rates would actually not be very positive for those things. So remember, prices are not going up because of too much money supply. Yes, that in part is affecting it, but there's so many other things. And I've said it 100 times that like we have to have a fully open, fully on fire economy where everything is working and the cost of goods is going in that direction before we're going to see interest rates increase. Now, another big thing of that, of course, is that, right now you have to remember a lot of people are just sitting on money. So there's not money throwing in through the economy, all those types of things, but people are just sitting on money and they're not able to do things because of COVID restrictions that can't move rates. So that's something else I wanted to mention as well. So, rates are going to go up this week, I think. And, but I don't want people to panic. I don't want people to lock in. The last part I need to, highlight today on my variable rate update is I'm really very terrified by some of the advice that people give, to be very honest with you. Sitting in a coffee shop this week, I was sitting beside two mortgage specialists who worked for a bank. And quite frankly, the information they're giving clients scared me to death. They were porting people's mortgages with the idea of putting them into fixed rates just because, in their words, it was easier. So remember, banks are predicted to have record profits this year. That's not because rates are going up. That's because they expect for people to take fixed rates, which are 5 times more profitable than an actual variable rate is. So banks are expected to have profit because they're going to get people into fixed rates. So these bankers were saying, because it's easier, we're going to port a mortgage into a fixed rate because it's easier and less cumbersome for them. So nothing to do with the client. It's an easier process for them. That scared me. Secondly, I had a client this week, show me an email from a bank, and actually a banker I knew who I think is well-meaning. But it just shows me what I'm really worried about is that I'm worried about the idea that people, like you may come to this year and you may decide to lock in and go a fixed rate, and that's going to be okay. That doesn't mean that I think that you're financially incompetent or anything like that. I want people making decisions and choices with all the information. That's very, very important to me. What I'm really worried about is people making decisions and choices without the information to make the right choice, because then they'll make a wrong choice. Okay. So looking at this email, I see that a client sends me the banker's words, and I quote, was, "Nobody in the branch has taken a variable rate, but if you want to be a gambler, you can take one, even though nobody knows what's going to happen with rates this year, and it's going to be a gamble." I am terrified by her emailing that, because in particular, what I'm mostly worried about with fixed and variable rates is the interest rate differential penalty. That client was telling me they're going to sell within 12 months. They're going to sell within 12 months. So that means that they are going to incur a penalty that is much higher than what they could even expect rates to go up to. And so they're not even asking the questions that would give them the ability to get proper advice. She just says that client is being a gambler. Make no mistake, I think people taking a fixed rate are gambling on something very meaningful these days. So, like that, something that I don't mention enough that's very important is that if you sell within 3 years on this mortgage and, you have a fixed rate, it doesn't matter what rates do, you're going to lose that money, because, that interest rate differential is the penalty is going to be so meaningful that it's not going to matter if rates went up or down, because you're going to lose a ton of cash. And we have tons of videos on actually just penalties, but they're not what people think. People think they're through as interest. They're not. All the